All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world, and happy Tuesday, everybody. Today's February 10th, 2026, and our top story this morning, Google has gone on a debt bender. They are borrowing dollars, they are borrowing francs, they're borrowing sterling, they are borrowing everything they possibly can. And, you know, all the analysts and these sell-side researchers who are on CNBC saying, oh, just pile into AI stocks. It's the next best thing ever. AI is going to take your job. We're all going to be rich. They keep telling us that, don't worry, this isn't a bubble because the AI data center build-out is being paid for by the reliable cash flows of big tech companies. Well, if that's the case, how come a lot of them have negative cash flows, free cash flows? All except Microsoft are actually spending more on CapEx than their free cash flow is. And why are they all loading up on debt? And why are half of them trying to hide it? It's interesting. It's almost like these sell-side analysts are full of it. And they're lying to you because they just want you to buy their stocks, because they're paid to tell you these things. Amazing, isn't it? Yesterday, we were talking about Google's issuance of dollar bonds. It was one of like the middle of the show stories yesterday. Well, they've got $175 to $185 billion worth of CapEx that they just announced for 2026 that somehow they've got to pay for. And so while they issued their 7 tranches, or the first of 7 tranches of dollar bonds yesterday, today they're out with 4.5 billion British pounds of bonds. That's about $6.2 billion. And 2.45 billion Swiss francs worth of bonds, or about $3.2 billion. All right, we're borrowing European here. And the interesting thing, some of these bonds have maturities of 100 years. That's right, a 100-year bond. Who wants to lend money to a 28-year-old company for 100 years? I'm sure they're good for it. I'm sure they're still going to be around, right? Like those bonds that you bought in 1926 from Standard Oil or U.S. Steel. I'm sure that ended up being a great investment after 100 years of currency debasement at a fixed coupon rate of whatever 4% they were issuing, you know, after the Great Depression and everything else that happened. Yeah, you know, what's the worst that could happen in 100 years? Shit, what's the worst that could happen in 100 days? It is the 2020s. But hey, man, these things are oversubscribed. The debt market can't get enough of it, probably because it's other people's money. It's pension funds, it's private equity, it's it's everybody who's investing somebody else's money. They're very forthcoming. Aren't they very generous when it's not them taking the risk? Meanwhile, we've got New York, the 6th state on data centers. And look, this is not just tree huggers in blue states, guys. This is across the board. This is red states and blue states are doing this. We talked about this not too long ago on the channel, how we've got Bernie Sanders and Ron DeSantis are in agreement. Neither one of them wants more data centers built in their state. This is pretty crazy, as Google and Meta and XAI and everybody's borrowing money left and right to build these things. The states are saying we don't want this. Why? Because electricity and natural gas rates keep rising. That's the primary driver. Affordability, guys, this is setting up to be an election issue. And when I say an election issue, it's going to be a contest to see who can be more opposed to data center construction, because literally nobody outside of Silicon Valley wants this crap. Freaking nobody is asking for this. Why are they still pushing it? Electricity prices rose 13% nationwide in 2025. Holy crap, what are they doing? Nice to see the politicians finally getting around to it anyway. Meanwhile, we've got XAI and Apollo cut a deal yesterday for $3.4 billion worth of financing to buy chips. Why 3.4? You're like, Jack, that's a rounding error in the grand scheme of things. It's because they're using off-balance sheet special purpose vehicles to pay for it. And if anybody studied the Enron collapse and the fraud over there, you may recall that special purpose vehicles, they call them Raptors. Now they call them Neo Clouds or CoreWeave. But, back then, that was the failure mode at Enron, was off balance sheet debt, as in it's not on our books. And so our auditors can't see it. And we report our quarterly numbers. Our investors can't see it. It's invisible to anybody. We don't want to see how much debt we're taking on to pay for this stuff. The only difference was Enron tried to hide it. XAI, NVIDIA, CoreWeave, all these companies, they're doing this out in the open. They're like unapologetic about it. Oh, also an anchor investor in this special purpose vehicle, this shell company that XAI is setting up. You'll never guess who one of the anchor investors is. Okay, you will guess. And it's probably the first name on your list. Yes, it's NVIDIA. All right, that was actually a very easy question. We got to throw softballs every now and then. Look, this is just, the circular event, if we will, everybody dealing with themselves. Grab the joystick to your right and just try to avoid eye contact. Apparently, that's how things work in Silicon Valley these days. Whatever, investors are still buying it. Meanwhile, we've got Eddie Bauer has filed Chapter 33. And I had to Google it when I saw it was actually Zero Hedge came out with Chapter 33. Me and Mish were talking. We're like, what the hell is Chapter 33? Apparently, that is industry slang for a company filing Chapter 11 for the third time. Okay, yep, my math, I get the same thing. This is Eddie Bauer's third bankruptcy in 20 years. But hey, that's a 100-year-old company. Anybody want to buy century bonds from Eddie Bauer while we're on the subject of Google? No takers? Okay. Meanwhile, we got retail sales this morning. They were flat for the month of December. Big surprise to the downside there. The market did not like those retail sales, unchanged at 0.0%. The market was expecting 0.4%, and that's following a 0.6% increase in November. The year-over-year numbers were 2.4%. That's barely keeping up with inflation, or actually not even keeping up with inflation. Lousy retail numbers this morning. The K-shaped economy, the bifurcation is laid bare for all to see. We got Coca-Cola with an earnings miss this morning. Weakness in North America. See also inflation is killing people. Harley-Davidson getting absolutely clobbered on their earnings this morning. It was an awful report from Harley-Davidson. CVS also down on weak guidance after they reported. The Trump administration surprised the healthcare industry with much lower increases to Medicare payouts this year. And, well, the insurance companies are taking it on the chin. Couldn't happen to a nicer bunch of guys. BP has halted stock buybacks. That's interesting. You see an oil major batten down the hatches, trying to shore up their balance sheet, heading into an oversupplied oil market. And we've got tanker seizures happening all across the world. The U.S. seized a tanker in the Indian Ocean yesterday. That's one of those tankers that ran the blockade in Venezuela back in January. They followed it all the way to the Indian Ocean before they seized it. Meanwhile, the Iranians are seizing tankers in the Strait of Hormuz, and the U.S. government is out telling ships, as you're transiting the Strait of Hormuz, which is like 15 feet wide, try to stay on the Omani side of it. Try to avoid Iran in this narrow channel of water where it's impossible to avoid Iran. Well, the U.S. is seizing tankers. Iran is seizing tankers. You get a tanker. You get a tanker. World War III at sea has kind of already started. They're just not really like shooting at the boats. They're just dropping people on top and taking them. I'm sure that's going to be a lot of fun. Guys, we got a lot to talk about this morning. Why don't we shrink my big melon of a head and let's see what's going on in the world of finance this morning. Don't forget that like button. You new guys, hit that subscribe button so you can come back tomorrow and have your coffee with the melon heads, because we do this every business day. And that is some good wake-up juice this morning. Right now, the S&P 500 is just barely positive, 2 points to the upside after being negative following the release of those retail sales numbers. The Dow is also just barely positive, up 4 points, 0.02, 0.01% higher this morning. Little bit of volatility in stocks here, bouncing around. The NASDAQ is up 20 points or 0.08%. The dollar's a little bit weaker this morning, 96.76, off by 9 basis points. That's going to put some upward pressure on asset prices this morning. Bond yields are moving lower. That means bond prices are going higher. A little bit of bond buying this morning. The 30-year yield is at 4.801. That's higher by almost 5 basis points. The 10-year, 4.155, higher by almost 4 points. The 2-year yield is at 3.458%, higher by 2.5 points. And the 1 month is at 3.693, higher by a fraction of 1 point. And looking at the metals market this morning, it's kind of nice. I mean, look, I get it. Gold and silver are red. I don't like to see them red. I would prefer they be green, but it's a small move. This is very refreshing. I want to see metals trade sideways for a little while, knock off the dang volatility, let the Chinese do whatever they want to do with their CF of a metals market. As long as they do it over there, I don't care. I like to see a little bit of calm in the metals markets. Spot gold, $5,054 this morning. It's lower by $5 or 0.09%, barely a rounding error. April gold futures, $5,077, off by not even $2, 0.04% lower. Meanwhile, spot silver at $81.95. It's lower by $1.34 or 1.6%, but compared to the $15 intraday swings we've seen, I'll take it. There we go. We got an 82 handle just now. March silver futures, $81.70, lower by 50 cents or 0.61%. I like the shiny, especially when the shiny is quiet. I don't like to see precious metals trading like meme coins, so I'm happy to see this morning. Copper lower by 0.5%. Platinum higher by 1/3%. Palladium up 0.5%, and WTI crude oil is higher by 0.4%, $64.63 a barrel for March WTI crude. Looking over at Bitcoin this morning, we are pretty much right where we were yesterday, below 70,000, 69.43. We peaked above 70,000 for a little bit yesterday, then came right back down to this level, currently down about $1,000. As shown on Coinbase here, about 4 days straight of quiet consolidation for Bitcoin. Now, interestingly enough, during these 4 days of quiet in Bitcoin, there's actually been a lot going on beneath the surface. In particular, this one here, we got in ccn.com. Binance adds $300 million in Bitcoin to SAFU fund as crypto's safety reserves shift. We've been talking about this one for a couple of days, how Binance has been using their emergency fund to make their users whole in the event of a hack. They've been using that money to prop up Bitcoin. They pledged their $1 billion of SAFU funds to support Bitcoin prices during this volatility. They have already burned through $300 million of that, and Bitcoin's price has continued to fall as they've been doing that. So even though the price is kind of trading sideways these last few days, CZ, Changpeng Zhou over there at Binance, he's got his fingers on the scale, buying up Bitcoin using his emergency funds to support that price. He's now gone through about 30% of it. When that money runs out, so does the buying support. Now, here is our main story of the morning. Alphabet seeks $9.4 billion from pound and Swiss franc bond sales. This is just a day after their issuance of dollar bonds. Google is tapping the debt markets, along with everybody else. Alphabet is selling at least $9.4 billion in sterling and Swiss franc denominated bonds, including an ultra-rare issue of a 100-year note following a bumper deal in the U.S. The sterling offering is expected to be a record 4.5 billion pounds. That's $6.2 billion, and includes tenors of 3 to 32 years, as well as the 100-year bond, according to people familiar with the matter who asked not to be identified. The Google parent drew a record 24 billion pounds of bids, they said. So again, there's no shortage of people wanting to buy this debt. It's pretty surprising here. The Swiss offering will be a minimum of 2.45 billion Swiss francs, or $3.2 billion, across maturities of 3, 6, 10, 15, and 25 years. Both deals are expected to price later today. The market in Europe will be able to absorb this supply, said Jack Daly, a portfolio manager at 24 Asset Management. For the sterling offering, there will be a large demand, and especially as a deal this size will become a larger portion of the index. On Monday, Alphabet raised $20 billion in a 7-part dollar debt sale, exceeding earlier expectations for a $15 billion deal. That attracted more than $100 billion of orders at its peak, among the strongest ever for a corporate bond offering. Alphabet's 100-year note is the first sale with such an extreme maturity by a technology firm since Motorola sold this type of debt back in 1997. All right, where's my Motorola Century bondholders? Call them out in the comments if you're holding any of those 100-year-old Motorola bonds. I'm sure they seemed like a great idea back in the 90s when those flip phones were all the rage as well. But geez, that's according to data compiled by Bloomberg. The market for 100-year bonds is dominated by governments and institutions like universities. For corporates, potential acquisitions, outdated business models, and technological obsolescence make such deals a rarity. Who can forecast what the tech landscape is going to look like 100 years from now? All right. Unless your name is Gene Roddenberry, you can't. All right. Or maybe Isaac Asimov. We'll let him in. He can play too. All right. If you're Gene Roddenberry or Isaac Asimov, you can buy 100-year-old tech bonds. Otherwise, probably want to stay out of those waters. Now, even as that is going on, We've got New York becomes the sixth state to propose a moratorium on data center construction. So Google's going to borrow money for 100 years and use it to build data centers that they're not allowed to build. Okay, that makes perfect sense. California may have led other states in regulating aspects of AI and AI companies, but New York is catching up. Having passed the Responsible AI Safety and Education, or RAISE Act, establishing state oversight of AI models, and a separate bill requiring disclosure of AI elements in advertising, lawmakers in Albany are now eyeing a measure to impose a 3-year moratorium on new AI data centers. The bill, introduced by Senator Liz Krueger, would prohibit the issuance of permits for new data centers, requires the Public Service Commission to issue an order or orders to minimize the impact of new data centers on electricity and gas rates for residential, commercial, and industrial users. The announcement makes New York the sixth state, both Republican and Democrat controlled, to introduce bills to limit data center development in just the past few weeks, after Maryland, Georgia, Oklahoma, Virginia, and Vermont. A Republican legislator in Michigan, they spelled Michigan with an M here, where dozens of local governments have already passed moratoriums, has said she'll introduce a statewide measure there as well, per Politico, while a Democratic candidate for governor in Wisconsin has also called for a moratorium. Can you see this shaping up as an election issue? And look at the states here, guys. Maryland, Georgia, Oklahoma, Vermont, Virginia. This is all across the political spectrum. Red, purple, blue, all of them passing bans or proposing bans. AI data centers have become the focus of a growing consumer backlash around the country over rising electricity bills, driven in part or entirely by increased demand for power. That's according to the U.S. Energy Information Administration, who said electricity rates spiked 13% nationwide in 2025, a steeper rise than in any year for more than a decade. 13% increases in utility bills. That's on top of what inflation did in 21 and 22, when the price of everything else went up. And guys, look, electricity touches everything. Everything you make, buy, sell, consume, every service. Electricity is involved to one extent or another. That's going to put inflationary pressures on freaking everything in the economy. And for what? What are we getting? AI slop, fake AI videos of controversial political events, stupid Super Bowl ads. Yeah. All right. Yeah. I mean, you guys know where I sit on this. You guys know my opinion on this stuff, but wait, there's more. Apollo and XAI, near $3.4 billion deal to fund AI chips, the information reports. But it's not the number here, $3.4 billion, small by circular AI financing standards. It's just how sleazy this deal is that gets me crazy. And by the way, that sound you hear, that is my views on Twitter going to zero because I said a bad thing about XAI. But whatever, I call it like I see it. I don't care whose platform I'm on or who I upset. Apollo Global Management is close to finalizing roughly $3.4 billion loan to an investment vehicle that plans to buy NVIDIA chips and lease them to Elon Musk's XAI, the information reported on Monday, citing a person familiar with the matter. Less than a week ago, Musk announced that SpaceX, the AI company he also leads, Less than a week ago, Musk announced that SpaceX, the artificial intelligence company he also leads, in a deal that values the rocket and satellite company at $1 trillion and the AI outfit at $250 billion. I think they missed the merger in that sentence as one big run-on sentence. But Musk has said that the rationale behind combining SpaceX and XAI is partly to advance the development of orbital data centers, otherwise known as data centers in space, which could use space-based infrastructure to support next-generation AI computing. And it's going to be very, very cost-efficient, these data centers in space, because we're going to save some electricity cost on cooling. It's just every time a wire comes loose or we got to swap out a card, we have the little detail of we got to put a man into orbit to do the work. But, that's all right. Maybe Optimus, the humanoid robot, is going to take care of that for us. Big tech companies are expected to spend more than $600 billion this year to buy advanced chips and build out massive data centers needed to deploy and train AI systems. But this particular transaction would mark Apollo's second major investment in a vehicle that leases chips to XAI, following a similar $3.5 billion loan made in November. Now, this is what's important here, guys. They're setting up a shell company, and the shell company is going to buy the chips and then rent them to XAI. And the reason why this is significant is because that debt no longer appears on XAI's books. The debt is held by the shell company. And so it doesn't look like XAI is in debt, even though XAI is in debt. This is exactly what Enron did, except Enron hid it from people. They're telling us out loud they're doing what Enron did. That's the difference here. They're just not afraid to say it because it's the 2020s and fraud is normal. Apollo said on Saturday that its funds led $3.5 billion in financing for a roughly $5.4 billion data center compute deal arranged by Valor Equity Partners to lease high-performance hardware to XAI. The financing, structured as a triple net lease, that's basically where the lease covers your electricity costs, your maintenance costs, everything else, to support one of the world's largest compute clusters for AI model training, also includes NVIDIA as an anchor investor in the vehicle. That is shocking. I am very surprised. Look at my surprise face. NVIDIA giving money to their customers so their customers can give the money to NVIDIA, and all of this happening in this dark closet where we don't ask questions in this dark closet. Whatever happens in there stays in there. Certainly doesn't end up on our quarterly reports or showing on our books. The sleazy data set. Guys, this massive experiment is an outright failure, and they're still doing it. And every day, as the failure gets worse, they double down and they take more of other people's money to try to bury it in debt and spending. And again, where is this debt going to reside? What is Apollo going to do with this debt? They're almost certainly going to sell it to 401ks and pension plans and IRAs. The sooner this bubble bursts, the better for everyone. Meanwhile, outdoor sportswear pioneer Eddie Bauer again files for bankruptcy. This one just hitting the tape yesterday. We talked about the rumor of this bankruptcy last week. Well, it is now official. The operator of roughly 180 Eddie Bauer stores across the U.S. and Canada has filed for Chapter 11 bankruptcy protection, blaming declining sales and a litany of other industry headwinds. The bankruptcy filing marks the third time in a little over 2 decades for the storied but now tired brand that began as a Seattle fishing shop, later outfitted the first American to climb Mount Everest, and made thousands of newfangled down jackets and sleeping bags for the military during World War II. Eddie Bauer LLC said Monday it had entered into a restructuring pact with its secured lenders as it made the filing in the U.S. Bankruptcy Court for the District of New Jersey. Third bankruptcy in 20-some-odd years for Eddie Bauer, the 100-plus-year-old company. I don't think they will be issuing any 100-year debt anytime soon. But I'm sure the 100-year Google bonds are going to be just fine as they incinerate capital at a rate the world has never seen. We also got retail sales this morning. They were a miss. U.S. retail sales unexpectedly stalled in December, following a 0.6% increase in November and falling short of forecast for a 0.4% gain. Gains in sales at building material and garden equipment dealers of 1.2%, sporting goods, hobbies, music instruments, and bookstores, 0.4%, gas stations, 0.3%, food and beverage, 0.2%, and non-store retailers, 0.1%, were offset by declines at miscellaneous retailers, furniture stores, clothing retailers, electronics and appliance stores, motor vehicle and parts dealers, health and food services and drinking places, and general merchandise. Basically no change at all in retail sales. The market was expecting a gain of 0.4%. You can see here unchanged for the month of December, following a nice 0.6% gain in November. So, that late Christmas season, you could see it in the November numbers. They came on a little late, but then they just outright stalled in December. And on a year-over-year basis, that's a 2.4% annual rate, down from 3.3% in November. These numbers are not adjusted for inflation, and so those December retail sales not even keeping pace with the rising cost of living. Not good, guys. You can see the bifurcated economy showing in these retail sales numbers. And you can also see it in Coca-Cola's numbers. Coca-Cola misses revenue estimates on choppy North American demand for sodas. Now, Coca-Cola's had a pretty good run the last few months, but taking a breather this morning. Coca-Cola on Tuesday missed Wall Street expectations for fourth quarter revenue and forecast muted growth for 2026 as demand for its sodas weakened in North America and Asia, sending its shares down 3% in pre-market trading. The company has been raising prices for its beverages to offset higher input costs at a time when U.S. consumers are increasingly looking for cheaper pantry options as inflation squeezes budgets. Rival Pepsi said last week that it would cut prices on key snacks such as Lay's and Doritos as consumers push back against several rounds of price hikes over the last few years. Coca-Cola's unit case volume rose 1% in the quarter, in line with the growth it reported in the preceding 3-month period. They expect 2026 organic revenue to grow 4 to 5%, compared with a 5% rise in 2025. The company reported fourth quarter revenue of $11.82 billion. That compares with estimates of $12.03 billion, so it's a big miss on revenue there. On an adjusted basis, it earned 58 cents a share, compared with estimates of 56 cents, according to data compiled by LSEG. So Coca-Cola having a rough morning here, down 2.8%, just off the lows of the morning. But again, if you look over the last year, Coca-Cola up 22% over the last 12 months, most of that coming since the start of this year. You could see that secular rotation out of big tech names and into consumer staples. It's been well underway for about a month now. Taking a breather this morning as the bifurcated economy takes a chunk out of Coca-Cola's earnings. And it's also taken a big chunk out of Harley-Davidson this morning. Dreadful report from Harley here. Harley shares slump on much worse than expected motorcycle sales. Harley-Davidson shares tumbled after the company reported an unexpected drop in motorcycle shipments, extending its struggles in the face of weak demand and punishing tariffs. Global deliveries of 13,515 motorcycles in the fourth quarter represented a 4% decline for the period. Harley said Tuesday in a statement, analysts had expected 16,408 shipments on average, or a 22% increase. Huge miss in deliveries for Harley-Davidson here. CEO Artie Starrs, who took the helm of the company at the start of October, is trying to sell down excess motorcycle inventory and repair relationships with dealers after elevated interest rates stretched consumers and weakened demand for the brand's premium bikes. He's also absorbing tariff costs inflicted by President Trump's trade wars, which helped wipe out margins in the fourth quarter. Not mentioned in this article was some blowback on woke corporate culture late last year. That's also taking a chunk out of Harley here. The quarter was disappointing virtually across the board, with sales of $496 million falling well short of the $749.3 million average estimate. Those sales missed by a huge margin. Expected 750, and they got just under 500. Yikes. Harley's adjusted loss of $2.44 in the period was more than twice as bad as expected. Dreadful quarter for Harley-Davidson. Stock, to be honest with you, is doing really well here. Only down 2%, considering just how awful those numbers they just reported were. Although keep in mind, over the last 12 months, Harley is already down 24.9%. So I guess most of that negativity was already baked into the price here. You can see, especially since September, Harley's way down. They were trading over $30 in September. Now they're down to 19 and change, off by 2% this morning. We also got earnings from CVS. Annual profit and guidance misses Wall Street estimates. It seems Medicare Advantage is taking a chunk out of CVS here. CVS Health Corp missed Wall Street's profit projections for 2026, failing to clear the high bar the market had set for the company after saying in December all of its business units would grow this year. The company forecast 2026 adjusted earnings of $7 to $7.20 a share, with a midpoint that was below the average analyst estimate of $7.17 a share. It said cash flow from operations will be at least $9 billion for the year, down from its previous estimate of $10 billion. The company lowered its cash flow projections for 2026 because some payments arrived early, CFO Brian Newman said in an interview. Let's see what else. CVS faces scrutiny from lawmakers and regulators in Washington who are concerned about the rising cost of healthcare, with U.S. President Trump saying insurance companies would lower prices. CVS's Medicare Advantage business, a private version of the U.S. health insurance program for the elderly, is especially vulnerable after the government last month said it doesn't plan to meaningfully increase payment rates in 2027. We saw United Health took a big hit on their earnings from that lower increase to Medicare payouts for 2027. And again, I don't shed any tears for the health insurance industry. I mean, the stock doing all right here. It's barely unchanged for the day, 75.64. Over the last year, CVS still up 40.2%, down a little bit since the highs in September. But look at this, zoom way out on the chart, and look at what this stock has done. It's hard to feel bad for companies like United Health and CVS when their stock charts look like this, knowing what healthcare costs have done to the average person and to the U.S. budgets end to the U.S. debt pile and thus the inflation, because the Fed prints money to pay for that debt pile, to pay for those healthcare payouts. So, yeah, I don't really care about CVS missing earnings, to be honest with you. Meanwhile, BP to halt stock buybacks as profit slumps. And the BP move to halt repurchases comes ahead of the new CEO's start. You can see the oil companies are batting down the hatches here, getting ready for an oversupplied market and sustainably lower oil prices here. BP said it was halting stock buybacks as the oil gas giant said it wanted to rebuild its balance sheet. The London-based energy group said Tuesday it was trying to reduce net debt by as much as $18 billion by the end of 2027. BP's planned capex of between $13 and $13.5 billion came in below the $13.85 billion that analysts polled by Visible Alpha had expected. This creates a strong platform to invest with discipline into our distinctive deep hopper of oil and gas opportunities, BP said. The dramatic move, called going nuclear by one analyst, comes ahead of the April start for incoming CEO Meg O'Neill. Now, not mentioned in this article is BP's dividend, which if they've already halted their buybacks and their dividend is already huge as a percent of free cash flow, or as a percent of what's the word I'm looking for? Their payout ratio, way too high. I would not be surprised to see BP cut its dividend in the near future here. This stock down 5% this morning on the news of the halted buyback. You can see BP is getting ready for lower oil prices here. There's a lot of talk about an oversupplied market. U.S. production continues to increase. OPEC has been increasing production. So this one, I would say, very bearish for oil prices. This story, now there's some bullish oil prices stories that can't be ignored as well. Case in point, we got this one, which as soon as I refresh my window, we will talk about it. All right, Wall Street Journal doesn't want to play nice in the sandbox this morning. So while that one is refreshing, let's talk about this one. U.S. urges ships to stay as far as possible from Iran's waters in the Strait of Hormuz after boarding attempts. We talked last week about how the Iranians were harassing a U.S. tanker and they were run off by a U.S. destroyer. And then a few days later, or a day later, 2 tankers were seized by the Iranian Revolutionary Guard Corps and their swift boats. So the U.S. is saying, yeah, try to stay away from Iran as you transit this unbearably narrow stretch of water that brings you right past Iran. And they're basically telling the crew, good luck if you get boarded. And while that's going on, we've got this one. U.S. seizes tanker in the Indian Ocean after month-long chase from the Caribbean. The interesting thing here is this tanker that we just seized. What are they calling it? It's the Aquila 2 was seized in the Indian Ocean after it left Venezuela. They followed this thing halfway around the world and seized it in the Indian Ocean a month later. The Iranians are seizing tankers. The British are seizing tankers. We're seizing tankers. Everybody is seizing tankers. All right. Global commerce is being attacked, whether they're shooting or not. You can see what's going on here. The world is breaking in half. Half of the world, the Russia-China half, going back behind the curtain. The rest of the world has the bigger Navy, and so they're seizing all the ships, trying to control the flow of oil. This is your bull case for oil prices, right? BP cutting their stock buyback, the oversupplied market, that's your bear case. Geopolitical risk is your bull case. I don't know which one wins out in the short term. I'm guessing that by the end of next year, we're going to be looking more at an oversupplied market. I don't know what happens to oil prices if things pop off in the South China Sea, if missiles start flowing over Taiwan. Certainly, we will cut off the flow of oil into China through the first island chain. What does Iran do in the Middle East? What happens in the Strait of Hormuz in the event of that? I just couldn't tell you. But the oil market is a mess here. I could go either way. I do own some oil companies, but I'm not really trying to trade this one. And I just want to say thank you very much to the Snowman. He says, what about the CapEx of the Melon coin? Oh, Melon coin's going right to the moon. Don't worry. You know, our reserves are totally safe. Sure, backed 1-for-1 by holdings in Melon Coin Inc. Yeah, why not? Sorry, I'm about as sharp as wet leather this morning. Yeah, no CapEx for Melon Coin. Guys, just be careful. I mean, we've had a couple of days of good trading in the tech stocks now. Ever since Friday, we had a little bit of a rebound. Yesterday was a good day. I don't know if that's going to last, to be honest with you. The sentiment was so negative last week. And what has changed besides nothing? Nothing has changed. So I don't really buy this 2-day rally that we've seen in tech. Thank you very much, Snowman, especially because that 2-day rally is driven by the same bullshit that drove the last 3-year rally that the market is no longer happy about. And we saw more of that yesterday. All these bonds, Google's taken off. The XAI story. It's more of the same, and the market is punishing that. Thank you, Snowman, for supporting the channel. And thank you to Armando, who says, when are the bubbles going to start popping? I no longer want to be kept in suspense. I think the bubbles are already popping. I think the share prices are taking their time. Oracle had a big rally yesterday on an analyst upgrade, but Oracle is already down like 40%, 50% from its highs of last September. So by some metrics, the bubble has already popped, but the big panic sell-off obviously hasn't started yet. We're starting to see it in private credit. Pay attention to that one because private credit is one of the ways that big tech and the hyperscalers are trying to source the capital to keep paying for these ridiculous build-outs of data centers that the states don't want them to build, since the government already told them, no, we won't bail you out by backstopping your debt. And then Sam Altman went to the Middle East to try to raise money from the oil sheiks. Apparently they said no because we haven't heard anything about the Emiratis buying all this stake in OpenAI. So I guess Sam was not successful. Don't expect the press to cover that, though. Again, the financial press is little more than sell-side research at this point. Thank you, Armando, for supporting the channel, sir. Mr. 4Ps says, at what prices are you looking to acquire more of the precious? I think most everything is way overvalued overall. Houses, vehicles, stocks, food, yada, yada, yada. I do think all asset prices are overvalued. Houses, definitely overvalued. Vehicles, absolutely overvalued. Food, look, the farmers aren't really doing great, so the people producing the food aren't really making money hand over fist. I don't think food is overvalued. That's not to say it's not expensive. I just don't think it's overvalued. Otherwise, I mean, farmers would be making stupid bank here if it was. That being said, the prices of the precious, when I was watching this sell-off and the ferocity of that sell-off early last week, late the week before that, I told myself 50. If it got into the 50s, high 50s, I would start buying. If I saw it get down into the low 50s, I would buy hand over fist. We didn't get that low. We dipped, I think, briefly into the 60s, but we never got down there. So right now, if I see us go into the 50s, I would definitely be buying. For the time being, though, I just want to sit back and wait. I want to see it trade sideways for a couple of days. If I see prices stabilize in the 80s and stay there and the volatility goes away, then I'd probably think about buying again at these prices. But for now, I'm still hands off the panel. I need to see things calm down before I start trading again. Thank you, 4P, for supporting the channel. Nacho Man 3086 says, love and hugs, kids. Well, thank you so much, Nacho Man. I appreciate the good sentiment. Been a Melonhead member for 5 months, and I know there's a lot of Melonheads out there who owe their membership to you, Nacho Man. So thank you, sir, for everything you do for the channel. Nashville Pasta Man says, Sam Altman, grab the joystick, family show. Yeah, we're not talking about an Atari here, Pasta Man. And no, yeah, maybe I shouldn't. I can hear M&J in my ear saying, Jack, don't do it. Stop it, Jack. All right. M&J, Nan, don't jump down my throat. I'll keep it clean. It's a family show, for crying out loud, Pasta Man. Hey, Nacho Man, Randy Savage gifted 20 Nobody Special Finance memberships. See earlier comment about, I know a lot of those Melonheads owe their membership to you. Thank you so much, Nacho Man, for all the support of the channel. Welcome to the Melon Patch, all you baby melons out there. Be sure and say thank you to Nacho Man. And as always, reminder, with that membership, you get one free super chat a month. So use that, and I will read and respond to your questions, thoughts, comments, concerns live on the air. Thanks again, Nacho Man. Armando's back again, says, what I can't believe is that even after everything that has happened in the last 4 to 5 years, it still isn't bad enough. More good times ahead. Yep, this decade's not done with us yet, Armando. It is only 2026. We've still got almost 4 full years of this decade. What's the worst that can happen in 4 years? Oh, my God, don't answer that. Yeah, and to be honest with you, as bad as this decade started, I hope I'm wrong about this. I think it's going to end even worse. I really do. But hey, the 30s are going to be great, baby. You're going to love it. Come on, 2030. Can't get here soon enough. Thank you, Armando, for supporting the channel. Mr. Richard Bell says, oligarchs buying the stairway to heaven. Well, when she gets there, she knows the stores are all closed. With the words, you can't get what you came for. Good tune. Greatest song ever written, or among them. My dad's not a fan of the Zeppelin, but I am. Sorry, Dad. I know good music when I hear it. Thank you, Richard, for the support of the channel, sir. Lex Lieberman. What's going on, Lex? Thank you so much for supporting the channel with 5 Nobody Special Finance memberships. Thank you for everything you do for the channel, Lex. Welcome to the Melon Patch, you 5 baby melons. And Learcy is here as well. Says, did you see the new GN video? Gamers Nexus? Steve got the tinfoil. No. Did Gamers Nexus really wear the tinfoil hat? Tell me that's true. Not this one. Did this one? Tell me they were rocking this in a Gamers Nexus video. I would freaking love it. I don't know if he actually got the tinfoil or not. I can't confirm that. But as soon as this is over and I wrap up all the things I need to do post-stream every morning, I am off to Gamers Nexus to see their latest video. I don't know, but I can tell you, I am increasingly a fan of Gamers Nexus. I love the snark, the sarcasm, the the cheap shots at Bloomberg, the cheap shots at NVIDIA. And I can tell you guys, before data centers were really a thing, gamers was NVIDIA's bread and butter, right? I mean, gamers built NVIDIA, the GeForce or RTX series GPUs. That's what made NVIDIA what it is. And talk to a gamer now, they freaking hate NVIDIA because NVIDIA has been abusing the hell out of gamers for the last few years. And you can see it in Gamers Nexus and the way they talk about the company there. So I have not seen that video yet, but I will. And I'm excited. The prospect of them rocking the tinfoil hat. Let's just say I can get down with that. Thank you, Learcy, for supporting the channel. Appreciate that very much. And thank you, everybody, for having your coffee with the Melon Heads this morning. Don't forget that like button and that subscribe button for you guys on the way out, you new guys. Come on back tomorrow. We do this every day. Thank you so much for all the generous super chats and support the channel, everybody, as well as you magnanimous Melon Heads on Patreon, YouTube, and Buy Me a Coffee. Links down below should you feel so inclined. Hi, Mom. Hi, Dad. Love you guys. Everybody, till next time, live small and dream big.